Hey guys, welcome back to the channel. Welcome back to another video. Some news had came across the market wire, and it woke me up to something, and it was surprising to see. But I mean, I guess it would happen sometime or another. I think I'm done with Lucid. I'm gonna sell my shares. Now I only have 20 shares, granted. But I think it's time for me to hang this up and wait to see what happens. Now, am I calling Lucid a bad stock or, a dead stick in the water or anything? No. But what I am saying is, I think for me, for where I want to go in my investment future in EV, after buying Tesla, I think I'm going to just wait off on this and see what happens over the next 3 years. And this is why I say that. I saw an article today that basically said that Lucid, in an attempt to get more cash, is going to offer, they're going to offer a, how can I say this? They filed what's called the S3. And the S3 is for something called the shelf offering. Now I'll get into what a shelf offering is, a little bit into the video, but their market cap is $27 billion, right? Now we all know Lucid. If you're an investor like me and you're all into it, you know that they're having problems and they're citing challenges of logistics and supplies. They can't get the supplies in, or they're having problems getting them shipped there. They don't have the supplies to make the cars, so they cut their production this year in half to 6,000. We all understand that. We all know about that, right? What they did was they put in a S3. S3 is something called a shelf offering, right? Which is basically, and it's up to $8 billion. What a shelf offering is where they'll create more shares out of $8 billion, right? And what they'll do is they'll sell them to you. They'll put them on a shelf, and then as they need cash, they'll dilute the shares that are currently out here by adding more shares from the $8 billion that they have, a little bit at a time, to build up the capital to pay for some of their future endeavors. Now, the first thing what that means is this. If they add more shares, first thing is dilution. Now, dilution is when, say you have 1,000 shares of something, right? And you have 1%. I'll make it even easier. You have 1 share of something, and it's 100 shares of stock. So that means you have 1%, right? Now you push it to 150, right? Total shares, you just add 50 more shares into it. Now the value of your 1 share is worth less because it's more shares added. That's what's happening with the brand. Now, with the dilution, it tells me that they have some type of desperation. And with the way these EV companies are going, everybody's trying to, get these cars out to production, get them through production and get them out on the street so they can, recover some of this money in this production that they're building and these costs. Because, like I said, the recession, inflation, everything, everybody's trying to keep their head above water. This right here is their Lucid's attempt to keep themselves above water. Now I can't knock them for this, but I mean at the right time it is now, it's not time for me to invest. Like $27 billion market cap, you're asking for 8 billion, you want to bring 8 billion shares into existence, and then over time you want to let them go. Now another thing about this is shelf offering. The shelf offering has a time limit of 3 years. So $8 billion, if the filing goes through, they'll have $8 billion they can distribute in the shares any way they want to in the next 3 years. Now, say, this is what I don't like though. Say the 3 years go by and they use $2 billion in shares and they still haven't achieved their financial goal, right? They can file again to get an extension on the other 6 million. For me, it's not for me right now. You know, I mean, companies that dilute, a lot of times, they face a lot of, how can I say it? The stock takes a dip, which in normal cases, it wouldn't be a problem. But the stock is taking a dip right now just from the market, you know, the situation with the market. So this stock could fall. I mean, really fall. You know, it's just speculatory, but I mean, it's a strong possibility, especially when this news gets out and like more and more people see it. And then the thing is, why would somebody do a shelf offering? You know, they need money. First case, you know, they need money. Everybody knows they need money. Second thing about the dilution is, once they have the money, you know, I think this is the only way they had to do this right now, because you know they're backed by Saudi investors, and I don't think they're going to go back and ask for more money, or maybe they did and got rejected. Nobody knows. But for them to make this type of move, what it tells me is that they're putting it on the line to where, okay, this is a way we can generate income by issuing more shares. Yeah, we're a startup, but it makes it look like they have some type of desperation. Now, this is one of the problems of doing this, and this is another reason why I'm pulling out. If you don't deliver on doing this, on diluting the shares, because some people will stay in, and that's perfectly fine. A lot of people believe in it. You know, Lucid, I like Lucid, but until I have some certainty, the smoke is a little less obscure, the vision is a little less obscure, I'll pull out with just a little bit of money that I put into it. And but yeah, I lost my thought for a second, but yeah, it'll come back to me. But yeah, like, oh, what I'm saying, like, if this doesn't work, you face a lot of scrutiny from like diehard investors. Like, yo, what are you doing? What's happening? Thus, you know, you can make a stock tank more. Nobody knows. But yeah, I just wanted to chime in on that. I mean, I know they want the flexibility. They want, you know, to just have cash on hand to make moves. You know, they did the thing with the 120 acres, and they hired a new guy in their software department, and it's a good direction they're going into. But I just don't understand this move. You know, I'm not a professional. I'm not a corporate business person. I don't understand it. But I mean, it's kind of scaring me a little bit. But if you could, leave me a comment. I'd like to hear from some of you other investors out there. You think it's bad that I'm going to sell my shares? Or what do you think? What do you think about the whole shelf offering thing? Is it a big deal? Is it not? But I mean, I definitely want to hear from you. And we'll see where it goes. Because I mean, you guys have been dropping comments lately, and they've been giving me a lot of ideas, and it's making me think in a different perspective. And that's what this is about. Learning and growing. So thank you for the comments. Keep commenting. I appreciate it. Keep subscribing. You know, stay in the race. Do what you got to do. And I'll see you in the next video. But before I go, I'm going to tell you one more thing. I don't know if Neo stock is not a bad thing. It's not looking, you know, I mean, it was looking okay before. But I might roll over into that. You know, I might. I mean, I'm only in 20 shares. It's not going to kill me. But I really like Lucid, man. And I think they pull. I hope they pull through. But that's it, guys. Thanks for listening to me, and I'll see you in the next video.